All right, let's get the technical stuff going. I think we are just about live here. Let me see. Let me make sure that we're live on YouTube as well. All right. Let's see here. Trades. Okay, got online. Okay, so all right. Good morning, everyone. It's Sunday, almost 11 a.m. here. I got Fatsal here with me. Just as always, every Sunday we do our U.S. economy and equities breakdown, and I'm really excited for today's topic of discussions. We're going to be talking about a lot of things regarding the U.S. stock market, how the U.S. dollar has largely been unmoved. We're going to talk a little bit about Tesla. And we're also going to talk about some of the best trades that I see coming up given the current environment for the next several quarters, or at least the next 1 to 2 years, depending on how the environment's shaping up. Okay, so all these topics are up for discussion. I'm really excited to have Faisal here with me to start discussing this stuff. And until then, let's get started. Make sure y'all hit the thumbs up. And make sure you guys also come join our Discord community. The link is right below. All right, so let's get to it. Welcome, Faisal.
How you doing, man? Happy 4th of July, or post 4th of July.
Yeah, happy 4th, man. Happy 4th. It's been a fantastic weekend of just kind of relaxing and also just doing some basic research of what's happening in the economy and the stock market. We had some non-pharma payroll numbers come out last week. Tesla stock, I think, hit almost $1,200. Lots of interesting stuff happened. So, why don't you give us your recap of the previous week?
Yeah, I think this is a week to remember. I think we're going to look back on this week as a very pinnacle week in what I think is about to happen. So last Friday, I really told y'all that even though the market sold down 700 points, I actually liked it more where the market sat versus when the market closed up the day before when it was up 200-300 points. And so that was based on a lot of micro trends that I was seeing in the leadership stocks. They were not breaking. They were actually all at very key levels. And even though it was a really ugly day Friday, I said, we're probably going to have a rally sometime next or the following week. And this week, we ended up going up around 4% on the IWM, 4% on the S&P. It was a really good week overall, and I think it could have been better, but there was some very interesting action that happened Friday, and I think it kind of ties into a lot of the news that we were getting earlier in the week. So to start off, I think the first sign that really shook me a little bit was when Apple came out and they said that they were going to sell half of their, or they were expected to sell half of their iPhone sales, and as a result, they were cutting half of their shipments of total iPhones. I think they went from what was it, 30 to 40 million. Now they said that they're going to put out 15 to 20 million new iPhones for this year. And so naturally, in my opinion, I was looking at the stock. It was down $2, and I was like, okay, that makes sense. But by the end of the day, this stock didn't even budge, and it actually closed up $2. So that was really weird to me. And I think when you get small signs like that, that's really not a good sign. I think some people can look at it and say, okay, that shows that there's a lot of strength in the market, that as long as these leaders continue to push out the bad news, that bodes well for the entire market in general. But at this stage, to see these stocks discount this type of big news, especially Apple, considering I think a lot of the premium that is built up into the stock is based on the fact that they were expecting these 5G iPhones to be record sales and record iPhone numbers. Clearly, that's not going to happen, but it didn't affect the stock price. And it's very, very weird considering the stock is at an all-time high, trading at all-time high PEs. The estimates for next year and stuff do look good. They're going to grow earnings, I think, like 14%, and revenues growing fairly well next year too. So the growth case is still fine, but remember, this stock is not at $200 anymore. It's not at 300. It's trading at all-time highs, and for it to just discount some significant news like that was a really big red flag. Then moving on, we got the Facebook news. Facebook had seen its advertisers drop them. I think the stock dropped again um, Monday, I believe. But Friday, I think when the first news originally came out, the stock was down 8%. I actually bought some at 215 and a half around that level, thinking that, okay, I'm going to build position here. And it's probably going to come down to around that 200, 205 level before it filters out a lot of the, weak hands or whatever and proceeds to go back up. But the stock actually was bought up fairly fast and recovered almost all of its gains. I think it's still down maybe a couple points from its high, but it's definitely not down 8 to 9% like it was earlier in the week. And that, once again, I think is a sign of a highly euphoric environment, that people just see something that's down a little bit and they will immediately just buy it up. And I was a bull. Like, I bought that stock initially because I thought, okay, this type of news does not diminish the long-term value of their ads and all this stuff. But to see it just brush off that type of news, considering that there could be even more advertisers that could pause or anything like that, it was really weird to me. This stock is at an all-time high, and you're talking about near-term earnings that are going to be affected in a market that's trading at almost close to all-time highs, especially if you're looking at tech. You would want to see the news flow be very good. And even when it gets bad and the selling initially starts, they just buy it back up. And I really think that's not a good sign. I actually got out of my Facebook 2 days later for like a 7% gain. And I said, look, I really didn't even expect this type of move to happen. And I think it's actually more negative than positive, the fact that it was able to recover so fast. So all that tied together really gave me this narrative that we were heading into some different environment. And then Friday was the biggest day as far as my technical micro trends that were telling me, last Friday, I use micro trends a ton, and it's like my own secret sauce or whatever. I look at a bunch of things and a bunch of stocks, and they kind of give me an overall picture as to how well these leaders are holding up their short-term support levels, their momentum levels, just different things. And Friday was the first day that I think I saw, especially stocks like Apple and even Amazon, which made an all-time high in the morning. I saw significant weakness and divergence from their weight on the S&P up cycles, which is something that I never saw prior to this. They lead the market. When the market goes up, they're usually the ones that are taking it up. But for the first time, I think I saw some divergence. And now I'm only saying I think, because this is only a 1 day move, and I usually wait 2 days to confirm an actual trend. But I would not be surprised to see tech pull back from here. Like that was my main field. Tech has gone up so much to the fact that I think it's either technically extended or the fundamentals are really getting too overpriced. I mean, that's way too hard to determine at this point. But definitely technical extension, I think that's a realistic case. And I think you can have a pullback in the tech sector, especially stocks like Apple, maybe 7 to 12% within the next 2 weeks. And so that's kind of how I'm playing it. I'm going to stay out of big tech. I'm going to stay out of high growth. There were some high growth deterioration names, like, even though the market was closed fairly well, software was actually one of the worst sectors of the day, barely closing up. You had a lot of leaders like Zscaler and Workday trade down, but I think we're in the early signs of a pullback. Just that's my take on it. It hasn't been confirmed. I think we'll get a confirmation signal Monday as to whether or not we are in the middle of a pullback. But yeah, I do not feel good about this market going forward, at least in the short term.
Got it. Yeah. I'm kind of there with you. The interesting thing is, from what I was looking at, technical and broad market picture, I do agree with you that I do think tech does need to take a breather. And, I think we had a stat or a chart a couple weeks back where we were talking about the S&P 500 and the NASDAQ. It was largely carrying, most of the index by, the weight of these big tech companies, right, that are the leaders. And so are you now implying that you said that, some of the tech, or especially the companies of the S&P 500 index, they took a break. So are you saying that the bottom, let's just say 490 companies or so, you think those are going to pick up steam a little bit? Or are you still saying that this might be a sector to sector cyclicality?
That's a great question. That's one that I actually don't know the answer to, because I got to wonder, if Apple falls, what does that do for the entire sentiment of the market? Because Apple has been such a key leader. If you've even followed Apple and just the uptrend of Apple, it's been strong since the start of this recovery rally. And it really has been, along with Amazon, and honestly Tesla, as one of the biggest movers in terms of sentiment. And as long as those stocks continue to hold up, I think the sentiment for the overall market, as far as whether or not it's investable, is really tied to their performances. So if it falls, I'm really unsure about what the other sectors do. Now, I will say, I put this out in my note, that if there is a pullback, I actually do expect other sectors to start to outperform in the housing, industrial. Energy is kind of unsure right now, but I'm still fairly bullish on energy at these levels, and definitely healthcare. Once again, I'm like, healthcare is just the best sector to be in my opinion. I think you're going to see those four sectors really pick up steam in the latter half, whereas all these tech names, even the high growth tech names, I think they're going to start to take a break. So yeah, but I think in terms of the near term pullback that I was referencing to before, no, I think everything will end up coming down, but you'll see Apple maybe go down 7%, and a housing company like Pulte or DHI may go down 4%. I think they're going to have relative strength compared to their tech peers, but nonetheless, I still think they're going to go down when the pullback hits.
I'm in agreement with you on housing and potentially energy possibly picking back up. The one interesting thing that I found is some of this rally definitely caught momentum in the first half of June. Same thing with the NFP job numbers that came out just this past, was it Tuesday or Wednesday? The job numbers we're talking about showing a whopping gain of, I think, 4.8 million jobs. But I think what people need to keep in mind is, first of all, these numbers came out in the middle of June, prior to the closing and the ramping up of cases that we've seen, in terms of the resurgence in Arizona and Florida and California and Texas. And so I think what we need to pay attention to is the idea that infections and cases are rising. Deaths themselves are a lagging indicator, and so is the economic slowdown, which is, again, a lagging indicator. So I think the next several weeks are going to be really telling regarding how the market is impacted. And so that kind of goes along with your theory is, if, let's just say, the deaths and, the market itself is a lagging indicator in terms of the cases rising, well, then it makes sense that the market itself overall should start pulling back. Another point that I'm kind of in agreement with you is, I would probably say utilities will probably maybe start seeing some more money come into that sector. And I would probably say, I guess Corona Advantage stocks, the ones that you and I have been talking about for a while, I think those will hold up a lot better, But I am a little bit more bearish on home construction still, because I think you had discussed the Blackstone Group, correct?
Mm-hmm.
And I think they were starting to see more delinquencies, starting to see more defaults. This was actually, there's what was it, housing report. I don't think it was like BIS. I forget exactly where it was. And they took a snippet of it and put it in Bloomberg. And I think the idea of this home construction, or not home construction, rather real estate, the pent up demand that we have, first of all, is still not anywhere close to the kind of demand that we used to have, say, prior years. And I'm not talking from a quarter to quarter basis. I'm talking about year over year basis. This kind of goes along with, the whole theory that consumers are possibly still a bit more reluctant on how the virus is shaping up in terms of the economy, in terms of their jobs, in terms of the uncertainty of their future. And so it kind of makes me a little bit more bearish on the housing sector. What are your thoughts on that?
I think so. I think that's a fair argument to make, because there is a lot of uncertainty out there. I basically think that there's a lot more upside in the housing sector purely because of what the estimates are showing us based on their relative performance. They're still expected to have record earnings in 2021. So whether or not it's the average consumer that's buying the house, someone is picking up these homes. And I can speak for the Houston market area. I've been looking at some houses and seeing whether or not they've gone on sale and stuff. And man, the housing market over here is hot. Like, you find a house you like, and I swear if you don't close it within the next 1 or 2 days, like, someone's gonna pick it up. It's a really hot market right now. Like, I totally agree with a lot of the good data that's coming out. I think it's indicative of what I'm seeing in real life, which is very positive. But no, I still think you're exactly right. There is a lot of inherent risk in this sector still because consumers, like you said, are still unsure. It also ties into, how well these refurnishing stocks have done, like Restoration Hardware, even Home Depot is kind of like a home restoration type of play. As people don't feel the need to buy homes, they feel the need to upgrade their own house. And I think the numbers that have come out for those stocks have been very, very nice. And that also plays into a trend. Well, are people, trying to upgrade their house, or are they actually trying to move out? So I don't know. There's mixed signals as far as how strong this demand is, in my opinion. But I think just based on the estimates alone, I think these stocks should at least trade close to their highs before they start to come back down.
Yeah, that's a fair point. Um, One of our viewers had a question about the impact of these prominent advertisers on Facebook earnings. And I think what he's saying is, isn't there only minimal impact? And that's what he's
Mhm.
heard. I'm going to answer that a little bit. Uh, One of Facebook's main models in terms of building revenue and somehow actually attracting money towards this platform is effectively advertisements. And even though I think Mark Zuckerberg is quite confident that advertisers will come back, which I think I do agree with him that it ain't like there's another Facebook.
Mhm.
The kind of data that you get, the kind of advertisement that you get in terms of the personalization and customization is, by far Facebook is, hands down above the rest of its competition. However, I think the one thing that I'm starting to notice, especially in America, and this, for anyone who's watching, it could be a good or bad thing, is companies are now starting to see that they need to uh, show what kind of morals that they have, whether it's the CEO or the corporation itself. And I think the users of these platforms and the consumers and the customers are also starting to realize, well, wait a second, like, do I support Mark Zuckerberg and his viewpoint of how he wants to regulate Facebook? Do I support some other corporation if they donate money to X presidential candidate? Do I support some company if they have something against let's just say the Republican Party or the Democratic Party, etc. Um, and so I think money overall will be taken out of these platforms. And I would probably say, aside from money being taken out due to morals, I think companies are now starting to realize, wait a second, I think the next several quarters do still have a lot of uncertainty, and maybe they need to, save on some of their cash that they have because of that uncertainty. And so I do think that Facebook will probably take a hit near term. But I mean, long run, like, there isn't a Facebook that's coming up anytime soon that has the same kind of reach and breadth that Facebook does in terms of its advertisements. So, but I do think overall Facebook, it will do well down the line. But for now, I definitely do think that it'll take a hit.
Yeah.
Yeah, your thoughts, Faisal?
Yeah, I just wanted to touch in. Like, I think I I kind of saw it in Chick-fil-A a couple years ago, where Chick-fil-A always had they supported um, anti-gay groups, and there were always a lot of backlashes against them. But let me tell you something: when I go to Chick-fil-A line in Houston, it is still lined around the block, And I think even if this type of cancel culture happens for Facebook, it's going to be very, very, very short term. And I think these companies know exactly how you said, there is no other alternative to Facebook. They just have, they are the best place to advertise on. And so I agree with you. The long term trend, as far as even technically and fundamentally, is still very strong. They're just too unique. They have too big of a moat around their business. But that's not where the worrisome comes in. The worrisome is how much people are willing to discount even the risk of near-term earnings in, like you said, in an environment that is so uncertain. So the stocks that have done the best during this quarter have been the ones that have the clearest growth paths as far as the next 1 to 2 years. And I think you're exactly right. This type of situation may last a quarter, maybe 2 quarters. And so for that reason alone, I think that should have caused Facebook to at least come down to, my support level is 200, and at least try and consolidate and filter out. But the fact that it just bounced up so fast, even though people had the same notion where I had when I first bought the stock was, hey, it doesn't affect the long-term value. I think it's really not naive, but like I just can't believe that people bought it back up so fast, because I think
It's a little bit short. It's a little bit short-sighted.
yeah, exactly. And I think this news is still ongoing. We still could have even more advertisers, bigger advertisers that, like you said, are uncertain. They're looking for ways to cut, cap it, or cut any type of spending. Like for instance, Home Depot, I think they spend a lot of money. I'm not saying that they're going to cut all their spending on Facebook, but I think it's natural to assume that they could cut some based on the environment that we're in. So, uh, yeah, I'm just very surprised at the stock, and just how willing people are I'm sorry, just how fast people are willing to get back into it, even as the news is still ongoing.
Yeah, last week actually, 2 Fridays ago, I think Faisal and I had discussed Facebook and its near-term potential downside. And I think in our Sunday call to our Advantage members, we also have this in our newsletter. I stated that possible that Facebook could dump down to 200 to 205. So if you guys don't like watching our videos, we also have a Medium channel, and you can find us on Medium, Alpha Trades. And we actually talked about Facebook potentially bottoming and finding a buy opportunity at 200 to 205. So make sure y'all go check that out. But I think I'm kind of in agreement with Faisal here that sometimes there are certain situations where you like to see a stock bounce back, but then in environments where almost all things seem, at least for the most part, overextended, high growth stocks like Facebook should at least be impacted by some negative news and have a deeper pullback than 2 days of downside and then aggressive buying, to the upside pretty much through the rest of the week. So it's almost like the stock pulling back is in effect better for its trend or its momentum. But if it just keeps on going up and it has these aggressive pullbacks, I'm kind of with Faisal here, where the euphoria definitely seems to be a bit too aggressive in the market. And I don't know if you want to be buying Facebook where it is right now, 233. I would probably figure that you might get a better opportunity buying back Facebook, possibly in, high 100s or maybe 175.
Yeah, easily. You don't, in my opinion, you don't want to buy Facebook here. If anything, you want to wait for it to break above that high that it has. I think it's at like 242 or 243. That's the safest way to play the stock, because the sell-off was very sharp, but the recovery seemed to be even sharper. And that itself causes a little bit of worry. That's just from my experience. I think the risk reward at this level is definitely fairly low. So just wait till it breaks above that all-time high if you're really interested in the stock. And I think if it is able to break above that high, then I may be willing to get back into the stock. Maybe I was wrong about how much impact these near-term ad cuts have. So I'm willing to be wrong, but that's my point that I'm taking in order to tell me that I am wrong. So wait for it to break to the all-time high. I still wouldn't buy it here. But in the long run, if it does pull back to around 200, 205, that's where I'm looking to build my position again.
Yeah, great point. So let's get into some other topics that I had. I was I think people in our Advantage community know that I listen to a lot of other financial networks, other people who are big hedge fund managers, and I think Fassel does his own due diligence of listening to people who are more experienced and smarter than ourselves. Um, Here's a point, Fassel, that I heard, which I want to discuss with you. The U.S. stock market has now effectively been, in some way, entrenched into the idea of it could be largely part of our national security, that we cannot allow the market to fall because that would imply that it would collapse, more jobs, it would collapse the economy. Because the dollar is such a big part of, the global trade market, that we cannot allow the U.S. stock market to fall. So it becomes, effectively part of our national security. What are your thoughts on that?
On the dollar, they just, that's definitely a big deal. They do not want a high dollar. No one in this world wants a high dollar right now, especially when the global economy needs to recover. I totally agree. Whatever it takes. I don't even know all the factors. I'm not a direct currency guy, but I'm sure the people who are have influence on the currencies, they're going to try and keep this thing down as much as possible as the global economy tries to recover. And I think if the dollar starts to rise back up, I mean, that just makes the recovery picture even more murky, because as you said, it's just so tough for these countries to pay back their debt when the dollar is so high, and especially if they're constrained as far as what COVID is doing to their economies. That's just a recipe for disaster. So I think as the dollar comes down, I think the dollar has to come down. I'm sorry, and it will. Um,
Yeah.
but I think that leads to other great plays. Like I think you're a big guy on gold, and I totally agree with that. As the dollar comes down, gold will become an even better play in the long run.
Yeah. It's interesting you say that because two of my big topics, I actually wanted to give out two free trades for our viewers watching right now. And guys, if you're watching, you better hit the thumbs up because I'm about to give you, some of my own opinions of how I'm going to trade this market for the next several quarters. Um, One thing I do want to let y'all know is Faisal and I are not investment advisors. We discuss this market on our opinion, our research, and all we're simply doing is expressing our opinions and research. Um, if you want to talk to us, if you want to understand our mindsets of how we trade the markets, there's a Discord link below. You could join the Advantage membership. It's $97 a month right now, where you get all this information right here. Okay, all the crypto information right here, all the equities information that Faisal puts out on a day-to-day basis, all the information in FX and then options as well. And so we provide all this information for our paying members because this is what Faisal and I do on a day-to-day basis. So, with that being said, two things I want to discuss, okay? In this whole printing of money that we've had over the several months, the one unique characteristic about the dollar is it's fucking unchanged. It is basically where it was pre-March, pre-COVID levels. And this to me is surprising because the dollar seems to be in its containment scenario. And more often than not, when you get into this kind of currency phase where the dollar itself is largely unmoved based on the factors prior to such a large economic event, it tells you that there are more factors at play. And so what that tells me is either the dollar is gearing up for another move to the upside, which I personally don't think the Fed will want that due to some of the same reasons that Faisal said. The dollar itself is largely, 79.5% of all trade in the world. Okay, this was actually a research done by Swift. Not only that, there are many swap lines from many other major economies in the world that utilize the dollar. There are also many other major economies and emerging markets that utilize the dollar to have US debt. So if the dollar rises, that means their ability to pay back the debt, their ability to import or export utilizing the dollar is even more stringent. That means they would effectively have to devalue their currency, which many emerging market economies cannot do anyway. That would destroy, their import-export balance. And number two, the dollar itself being at the levels that it is right now, or possibly being even weaker, effectively signals to the market that, wait a second, it seems like more and more people are not piling into the dollar. Rather, they're not cash hoarding. They are actually using the dollar as an expendable asset, meaning that they want to continue trade, meaning that they want to go out and buy stocks. They want to go out and spend money. These are all things that you can look at the dollar as an effective metric of understanding what exactly is happening to the velocity of money in context of the dollar. And so the way I see the dollar right now is that if, let's just say, we break down past this key support right here, which is somewhere around the 95s, I would probably say that the dollar at least gets to mid 80s and possibly high 60s. Now, I know that's a far stretch, but what that does is it opens up doors for us in the EM markets to effectively either, depending on which way the dollar breaks, we might actually get to long the dollar against the EM markets if it breaks up, and short the dollar against the EM markets if it starts breaking these key levels. Now that's trade number one. Trade number two is gold. Gold, this is one trade that I've been telling my Vintage members about for a while now, okay? Gold is an asset that, whether it's inflationary, deflationary environments, especially recessionary environments, gold does perform well. And if you look at gold right now, it looks like it's creating a massive cup right here. The handle is possibly still to be made, but it went through this big sort of reaccumulation period as per, just basic technicals for several years down here. And so I personally think that gold is one asset that you want to pay attention to, because I don't see gold by the end of 2020, I don't see gold under $1,900. Okay. So these are two big trades that I have my eye on for the remainder of the year. Watching the dollar and seeing how it's going to shape up. If it breaks 95, possibly look for 85 and maybe high 60s. If it breaks up past 97 and 99, it's possibly going to go back to its coronavirus highs, which was, I think, 103, 104. Let me see where it was. Way the heck up here. Yeah, so close to 103. So these are the things that you want to pay attention to. Okay.
I got a quick question.
Yeah.
If the dollar were to break up to that level, that 102, 103 level, what do you think would need to happen in real life or whatever? What do you think would cause that type of jump in currencies? Is there any specific event that you think could happen, or would it just be an escalation of COVID stuff, or would it be a deterioration of the global economies? Like, what do you think would be the main factor to drive it up to that price?
I think there's multiple factors, and I think that's a great question. So I had pointed you to Lynn Alden. She's a very well-known macroeconomist, macro trader. The one thing that she talks about is, she actually believes that the dollar could start breaking down. However, the catalyst that could set off the dollar to push up higher is some of the same catalysts that set it off to push higher during the March rise, which was an uncertainty and panic in equity markets, because it was largely a liquidity crisis, right? Everyone was trying to get their hands on cash, and cash meaning more than likely the reserve currency of the world, which is US dollars. Same thing was kind of happening around the world, which was, major corporations, major economies, major governments around the world were also looking for dollars, because they were already dollar strapped. And so if 79.5% of the global trade is carried out in dollars, everyone wants dollars. So what would really trigger off this market is, in my opinion, two things. Something similar to the event of what happened in March, which was, coronavirus. I don't think you need coronavirus directly to set off the same kind of events, in the next round. I think bonds possibly breaking down might force people to, maybe create a hedge or a, diversification in terms of pulling into more cash. Or equities breaking down would also force the same effect, which would effectively mean, going more into dollars. So these are the things that I'm kind of paying attention to. This is why I think Faisal and I discussed what's happening in the surrounding environment of coronavirus. How is the economy looking? Do the job numbers, from NFP reports, are they truly valid? Do they really signal the sentiment of what's happening in the American economy? I mean, personally, I don't, because again, as I stated at the beginning of this video, these job report numbers for NFP, non-farm payroll, were pulled prior to states rolling back in their phases, prior to states closing, prior to this whole increase and ramping up of infections. So I think, going forward the next 2 or 3 weeks will be really telling of, first of all, how the job numbers come, say next month. How do the respective economies of Texas and Florida and Arizona respond? How does the stock market respond based on what's happening to these states? For all I know, it might be largely unchanged. The market could just shrug it off, and it might just say, hey, there's so much money being printed from the Fed, we don't give a shit. That's very possible, because so far, I think that Faisal said this many times before, it seems like the market's kind of factored in, that the reopening happening. But has it factored in, let's just say a worst, tail of the first wave? Has it factored in a worse second wave? Has it factored in lockdowns potentially happening again? I don't know.
Yeah, definitely not. I would touch on that and say no. The market is not factoring in lockdowns coming back. I think I haven't read anything like that that's suggesting of that. People really don't think we're going to get back to where we were before. We're at a completely new area as far as understanding what we're dealing with and how to combat it. So I don't think this administration will want to even go back to that type of economic strain. But in any case, I think the Fed has shown us that even if we do, they're going to be there to bail out everyone. Or they're going to be there to save the market at least. So I think that's always in play. But as far as gold, I think gold, you're exactly right. Gold, it just looks like it's going to continue to go up in this type of deflationary environment, inflationary environment. And it naturally, when you look at the technicals, yeah, they look very strong. They look like they're ready to break out, honestly. So a name that I'm in, that how I play gold a lot. I really don't play materials that much because I don't have that good of an understanding of them. But I like Kirkland Lake. That's one that I'm in. I got our alert members in at $38, and I think it's like at 42. So it's gone up quite a bit since we got in, but I still think there's a lot more upside in this stock. It's a really fundamentally great miner. I don't think they're a pure gold play, but they're a pure material play, and gold is their biggest asset. So that's a name that I would implore everyone to keep an eye on. And if you want to play gold, but not necessarily buy the gold asset, this is not financial advice, but I recommend checking out Kirkland Lake KL.
Yeah, I'm right there with you. I have some GDX, which is the gold miner ETF, in my retirement portfolio, and I have GLD, which is the gold trust ETF, in my retirement account too. Both of those have actually performed pretty well over the last several weeks. Mm-hmm. I think this is one thing that in terms of our service that we provide for people, we keep track of all these positions and let people know exactly what we're trading, our stops, our entries, our target profits. And at the end of the day, I'm not going to tell you to buy or sell, but I'm definitely going to show you exactly what I'm doing in the market. And I think this is definitely a big part of our community that people truly appreciate.
Yeah, totally agree. I just also wanted to touch on when the dollar does come down, and if it does come down, in my mind, the way I'm trying to play it from the equity side, besides buying gold, is I'm really looking at these industrial names. URI is one that comes to mind. I've talked about as the global economies need to recover, even over here as we need to recover, a lot of those jobs are going to be made up in the industrial sector as we have this huge infrastructure bill that seems like it wants to get passed on both sides on both parties. So there's some bipartisanship there, which is very unique in this day and age. And when we get that big infrastructure bill and it's all said and done, I think URI is one of the best companies that's positioned to benefit from all this increase in industrial activity. So that's the name that I'm looking to get into once everything kind of clears up. If this market ends up pulling back, like I said, I think industrials, energy, housing, and healthcare are going to be the 4 top sectors to lead this market in the latter half. And URI is probably my top pick. I really like Parker Hannifin. They're a great company, but I took a look at their fundamentals a little bit, their estimates, and it kind of did not paint as well of a picture as I thought. They were really my favorite industrial company before this whole thing happened, but I think URI is probably my top pick for the industrial sector.
Yeah, good point. Let's take some questions from the chat. And guys, if you have any questions, make sure you post it in the chat, okay? So one of our members wanted to talk about Enfin. I don't know what that is. Nefton Acquisition Corp. Wow, I don't know. This chart looks like shit though.
Yeah, I don't know if it trades that much. It doesn't look like
yeah, yeah, it definitely does not look like it trades at all. I don't even know what this company does, but I'll tell you on just from a basic technical perspective, like there's not a whole lot you can look at this and say it's bullish or bearish because there's not even enough data. It only dates back to like August 2019. It had this massive drop. So either this is a very illiquid asset or it's like a penny stock maybe, and it doesn't really trade that well. Not like a penny stock is obviously at 1079, but it trades like the characteristics of a penny stock. So yeah, so I'm not into this. I can't really give you any insight. Sorry about that. Let me check out something else. Job. Okay, I never heard of this either. G Group. Okay, I gotta be honest. I've never heard of this stock either. Yeah, I feel like, yeah. So I feel like, guys, when you ask us these questions, we're gonna be honest. If we don't know something about a particular stock or a crypto project or anything, we're not gonna BS you. So I really don't know what this company does, but from the look of this candle, it looks like there was definitely a lot of selling that came in. This is like one of your gravestone dojis or your evening stars, whatever you want to look at it as. Definitely looks bearish to me. But if you know some fundamentals about the stock and why it's good, then I'll let you decide what you want to do with this. But just from a technical basis, this candle right here looks like crap. Okay. Let me see here. Let's see what else we got.
I got a couple questions. Oh, actually, you go ahead.
Yeah, let me just answer these questions real quick. Okay, so the Qs are at the top of the channel. Yeah, so I've been paying attention to this chart right here. I think I know exactly what people are talking about when they say QQQ is at the top of the channel. Here's the thing about the Qs, right? NASDAQ has some really powerful growth stocks in it, okay? And I think even Austin was short, like right around here, and I think he covered just a week after because he also realized that the abundance of strength that lies in this particular index, especially because there's high growth stocks in there. Now, yes, we are at the top of the channel, but from a technical perspective, we should get a pullback. However, again, we talked about the permanent open market operations Friday, or I'm sorry, what was it? Wednesday. And, it's very hard. It's been very difficult to sort of fight the Fed. And I really hate saying that statement, like, don't fight the Fed, because it sounds like such a cop-out. But to be honest, there's really no other way to look at the market right now other than seeing that we have the biggest central bank, the biggest buyer of the world, saying that if the market goes down, we got your back. I mean, they're not saying in those exact words, but more or less that's what they're saying. So whenever I look at technicals and I see overbought, oversold levels, I'm kind of just looking for a pullback, and I'm thinking, well, shit, if the Fed has my back, and the permanent open market operations are saying that there was $80 billion worth of buying from the Fed going in this week. The following 2 weeks, we have $112 billion of buying from the Fed going in. Well, I'm not going to fight that, So this whole idea of Qs being at the top of the channel doesn't really mean a whole lot to me at present moment.
Yeah, I just want to touch in on that real quick. Yeah, as far as when people use technical analysis on ETFs, I personally don't like to do that much on like channeling or anything like that as far as ETFs are concerned, because they're all comprised of these different stocks That's why I like going in and looking at what the portfolio is comprised of and looking at the technicals of those specific stocks like Apple, Visa. I don't actually know that's XOK, but definitely Apple and Microsoft make up a ton of the weight in that ETF. So I think it's just better to look at those individual technicals versus the technicals of an ETF to determine whether or not it's going to come down or not. That's just my little 2 cents on that from my experience. I will
Yeah.
say uh, regarding what you were saying about the Fed, remember these companies are doing amazing right now. Okay, they're actually growing in this environment. Actually, I think Apple's estimates came down a little bit for this year, but they're still growing marginally. Definitely Microsoft is. But understand that the Fed is going to keep interest rates low for the next 1 to 2 years, probably, as small businesses need to recover, and you have to have that entire recovery cycle happen in one huge part of the economy. So these low interest rates are going to be so beneficial to these big companies that don't even really need them. It allows them to have a lot of flexibility as far as taking risks and just providing more growth in the future. So never discount these big names. Even like almost said, the Fed has your back. The Fed doesn't need to have their back, but naturally by keeping rates low, it always has their back. Period. So you never want to bet against these stocks, but you always want to be ready to buy them on any type of pullback.
Yeah. Actually, the Fed minutes from last week's meeting, they said that they want to keep rates near zero till 2022. The Fed also, quote, they said they need highly accommodative monetary policy and sustained support for fiscal policy. So I think they're effectively saying, like, hey, if Congress provides a stimulus and the Treasury is ready to, start opening up their machines, the Fed will do whatever it takes to go into the market, and if they have to buy individual corporate bonds, which again they'd never done prior to this year, they will. If they need to go in and fricking buy equities, shit, they might do that. You know,
Mm-hmm.
so these are the things that don't underestimate the Fed, because they are in full Godzilla mode. They're going to eat whatever they need to eat to keep the economy from falling apart. And just a couple of minutes ago, we discussed this whole idea of the U.S. stock market and the dollar being almost central to how the world itself sees the strength of the biggest economy in the world, as part of their own individual currency strength, or their own individual strength of import and export. Because if America starts breaking down, I think the world itself is going to start realizing, okay, it might be time to start panicking. But as long as I think the Fed has this accommodative policy, they're doing whatever it takes to keep the dollar tamed, to keep the stock market going. For now, I'm largely unconcerned. Doesn't mean I'm willfully ignorant and saying that, oh, Fed's always going to take care of our problems. It's just that for now, it seems like they got things under control. And we will see the signs, by the way, when they start losing their control, because you might start seeing bonds fall apart. You might start seeing interest rates rise. You might start seeing the dollar start, pushing up. You might start seeing equities break down. These are all visible signs that the Fed may not be able to, just print its way out of things. I also believe that the Fed cannot print its way out of creating jobs, right? You can only do so much to give money, or rather give free money to a company to borrow. But if the company itself is not seeing its ability to, keep the production lines going, keep consumer demand up due to, let's just say, the coronavirus, or maybe a weak consumer, then the company itself might go bankrupt. So these are all signs that the reason why I'm mentioning this to you guys, it's never a simple guess as, oh, well, the Fed didn't do this or this happened, and now, things are going to start breaking down. It's always a multitude of things that come together almost, like a wave, and then they start impacting the economy, the stock market, the jobs market, etc. Faisal, so let's kind of move on to a couple of things. A couple of things that I found on Twitter. Ray Dalio was talking about capital markets, not being free markets due to central banks. I feel like in large part, I'm definitely in agreement with that, and I've heard other smart people definitely mentioning that. Well, what's your thoughts on a statement like that?
Yeah, look at the first reply. That's exactly my uh, thesis to what he's saying. Yeah, he's not
Yeah,
wrong, but everyone pretty much knows that exactly.
right.
Like everyone knows that and is expecting that at some point.
Yeah, I totally agree. I think the simplest answer, which is the saddest answer, is that everyone in America knows something is not right. And though we do believe that the Fed intervention could have some positives, and down the line, this has never ended well for any country, any territory, any empire. You know, printing your way out or devaluing your currency has never quite worked out.
Yeah, but I
Um,
would say there has never been this type of global, like not monster, but global giant, like how America has positioned themselves as far as how much influence the dollar has on every single country. I just like I even though the central balance sheets are going to explode, I don't think it means that much in hindsight because one, we still maintain dominance, and two, it looks like everyone else's central bank or everyone else's main bank is their balance sheets are exploding too. They're all pumping money into their own system. So um, that is also weighing in on the entire balance of how much impact this is going to have in the long run.
You know, it's interesting you say that because I don't think anyone else is printing as much as the US aside from Europe.
Yeah, for
I
sure.
mean,
Because I mean, the economy is much larger by just an enormous extent. But as far as the relativity is concerned, I think that because everyone is doing that, it does not mean that much as far as the numbers are concerned.
yeah, fair point. Let's move on to Tesla. You know, I thought this was really interesting. Tesla obviously pushed towards what was it, $1,200 in terms of its stock price. Tesla has sold fewer than 400,000 cars in 2019, while Toyota sold 10 million cars in 2019. Not only that, there was this interesting point about Tesla's Q2 deliveries, which was U.S. Model 3 sales were only about 18,000 cars, which is negative 60% year over year.
Wow.
Leased vehicle sales were down negative 30% year over year. Excluding China, global sales were negative 30% year over year, despite the Model Y news this year. I just really am surprised. I mean, I guess I'm not really surprised because again, the overall market sentiment has been push stocks up no matter what's going on in the background of the economy, keep projecting forward earnings out to 2022, 2023, and maybe things will get better by then. These are all uncertain projections that we're pushing out, that the world will obviously the world will get better, but can the stock price now factor in the lack of sales, the comparison to Tesla? These are the things that really concern me. First of
That's
all, did you
oh,
know
I'm
about
sorry.
these numbers? First of all, did you know about these numbers? And I guess, what are your thoughts?
I actually did not know about these numbers. They look damn bad. I mean, they look terrible. There are numbers though that I am paying attention to that I don't think a lot of people are aware of, which are the earnings estimates and the revenue estimates for this year and next year. So they're quite surprising. And before I used to be kind of like, okay, Tesla's going up way too much. At some point, it's got to come down. But then I took a look at the estimates, and boy, are the analysts just so positive on this stock? And maybe it's for a right cause. You know, they obviously have more information than I do and about the company. But let me just give you guys a little bit of insight. So for this year, Tesla is still going to grow, expected to grow 8% on revenue. They're going to make $26.6 billion. Next year in 2021, they're going to make $38.5 billion, which is a 44.5% growth from the year before. 44.5%. Okay. Now, how does that affect the bottom line on the earnings? Well, this year, damn, this year the estimates are actually growing 3,000, or I'm sorry, the earnings are growing 3,261%. They're at all-time highs. It's going to be of $4.37 a share, which the stock has never made more than let's just see. The stock has never made more than $3.70, or I'm sorry, no, that was this year. The stock has never made more than 78 cents, which it made back in 2013. So that $4.37 a share, that's very positive. Next year, they're expected to make $13 a share. And that growth rate is just substantial. And I think it really is impacting and giving real legs to this move in the upside that we're seeing in Tesla. So it's not just all hype. I think there's a lot that's going on as far as electric vehicles being some of the hottest stocks right now, Nikola and Neo and all that stuff. It's a really good time to be in electric cars. But Tesla is actually backed by probably the best growth rates of any stock in this market that I've seen. It's literally growing so exponentially fast. These numbers that you did provide me, though, I mean, they just came out yesterday. So I'll be looking forward to see if the estimates bring down or if the analysts bring down the estimates. But for now, just basing on the numbers that are currently out, this stock can even go higher, honestly.
Yeah. I mean, I would not be surprised either because Tesla's been kind of on a roll. And I know there was a lot of short interest. Like, I think not last year. I think, where was it? Somewhere around this area, like March or February, there was a lot of short interest. I remember, reading some data on that. But then after, I think, pushing the stock up this much, the short interest has got to go down significantly. You probably squeeze out a lot of shorts on the way up. That's probably also largely causing the fuel on the way up. But I'm just, man, I just, kind of read some of the statistics, and I feel like, so I first bought Tesla 2 or 3 months after its IPO. And I still remember I was so excited because I love the company. I love Elon Musk. And the kind of growth that Tesla has seen over the last several years is not the same kind of growth that you would expect from, such an amazing company. And I mean that it was severely underwhelmed, in my opinion. I think it's seen substantial growth, but the way the stock has kind of taken off, I don't think it fully reflects the numbers underlying to its sales. So I'm curious, like, well, where exactly is all this excitement coming from? Are the analysts just looking out to the future based on the numbers and projections that you're talking about? Or is there more to Tesla because they're, I don't know, maybe building autonomous cars that may help, in the distribution networks of, these trucks, right? Are there other things that they're factoring that we may not be aware of? So that's why I'm a little bit more cautious on Tesla stock.
Yeah, I think speaking directly on the car sales, sure. I think there are still a lot of holes as far as how much they can actually deliver and meet that demand, and whether or not that demand actually teeters off if their wait times become more extended. But I think at this state, a lot that's being priced in is maybe their energy solutions, the technology that they're coming out with their batteries. That could be priced in because you're exactly right. If the car numbers, which in my opinion, when I think of it, should be the main driver, are actually kind of in the near term going down, why are these estimates jumping up like crazy? And I think that'll be something to take a look at come next earnings call. And I think we all need to pay attention to what they're doing in the other areas of their business and not just focus on the fact that Tesla now overtook Toyota as the highest market cap automaker. And I think people are, when they look at that, they're like, that can't be right. There's no way that can be right. And I think a lot of people are going to short that stock. And frankly, Tesla is not just an automaker anymore. It's beyond that. So I think that's probably priced in.
Fair point. Let's take a couple of questions from the chat. So a question about Square. So I'm actually a huge bull on Square. I'm a big believer in Jack Dorsey. I also truly think that Square is a very innovative company, and they're actually quick to pivot their business model and actually adapt much better than other providers and other potential payment platforms. So I think personally, Square is, in my opinion, a better bet than PayPal. Let me see. What was the other question here?
See, I'm definitely more of a. I've definitely been more of a bear on Square. Square has actually been one of the stocks that I have refused to get into. It's really been just an idea that I've been wrong on for now, but I still hold firm that this company just has too much competition. I get on their fintech side; it's very interesting, and I mean, honestly, I like Jack Dorsey as an innovative guy, but he's not a stock CEO. I don't think he's actually good for the stock. I actually would like another CEO to be there that's more focused on returning shareholder capital. But I think they're losing ground in their core business, which was the business to business type making those, whether it was those plug-in things that would accept credit cards or even their POS systems. I actually see a lot of competition in that space, and there are a lot of innovative products that are coming out. Here in Texas, there's a company. I know they're not from Texas, but like there's a company called Toast, and they make a lot of these POS systems. And man, the growth of that, I used to see it just in a couple of stores, and now I see it all over the place. And I think as there's more competition in that space, I have no doubt that there's going to be even more players coming into that. I think that really hinders Square's ability to make more gains at the premium that they have now. I will say I agree with you. Their ability to pivot their business is pretty strong, and it's unique for a tech company. But yeah, I'm just still a bear on that. Like I refuse to buy that stock, honestly.
Yeah, fair. I think that's a fair point. I mean, there's definitely a lot of competition in around the space of, say, merchant services providers or financial services providers. But I think I've just been really impressed by Square because they are, especially because Jack Dorsey is kind of leading, the forefront on digital payments, potentially utilizing blockchain in some way to utilize payments. Again, we don't really know what the future holds. For all we know, like blockchain, could be like a fairy tale, in the next couple of years. But the fact that he is willing to sort of look at these new innovative ideas that are coming up and give it a chance on his own companies. I mean, if you think about it, here's the most amazing part about Jack Dorsey, right? The only thing that he has in his Twitter bio is Bitcoin. And you could look at that and you could say, well, I mean, that doesn't mean anything, but someone who actually believes in a product like Bitcoin, or someone who believes that the future is digital payments, and he is willing to be so radical in wanting to make sure that his companies are leading the forefront on even the most speculative technologies. At some point, he's going to get one of these technologies right, whether it's utilizing Twitter for digital payments or utilizing Square and Twitter together. It's the same idea that we were talking about Libra and Facebook, right? When Libra was supposed to be the digital currency of the world, and Facebook was going to be its main base and a main hub for utilizing that currency. Didn't pan out that well, but it's still in the works. It didn't go away, right? It might just need more development. It might need more adoption in terms of other big players who are trying to seek that, this might be the future. And I think I really respect Jack from that standpoint, because he's not giving up on these ideas. In fact, he's doubling down and he's saying that, what, this may not be the right time, but let me see, what else I can do to kind of provide the support for Square being, utilizing Bitcoin. By the way, I think Square is one of the products that started to take digital payments, such as Bitcoin. PayPal is not there yet. Other, POS systems are not there yet, but Square is sort of leading the frontier on these things.
Yeah, I agree. He's definitely an innovative guy. Who the heck hacked his account and just put Bitcoin there? Like, I'm pretty sure it's that fake Warren Buffett account. Like, someone is making a joke out of him. I don't think he notices yet. He's gonna change it, like, Twitter CEO or something like that. Man, I'm surprised it's just Bitcoin.
I know, man. It's been like that for years. It wasn't like he
really?
came about it like yeah. It's been like that for years, man. It's crazy. Let me see here. Let's take some other questions. So Peloton, I got to be honest. Like, I'm not the biggest bull on Peloton. I've seen a lot of friends on my Twitter feed and Facebook post about it, but like, man, I really think this stock is a bit overvalued. But the thing is, like, we're in this coronavirus environment, and it's really hard to say, what kind of companies are really going to take off and even further accelerate their stock price due to this brand demand that Peloton bikes have. Even though the bikes are severely overpriced compared to like any random bike that you could get at, like, let's just say a Walmart or a Target. I know there's some other technologies involved with it, but yeah, I'm not the biggest bull on Peloton. Faisal?
Yeah, I just want to say, for the people who want to short this stock because it's overvalued, I was thinking about shorting this stock when it was at $30 for the exact same reason, and now it's at 60. So I mean, there are some trends that you don't want to fight. Like I'm still a believer that Peloton is not the game-changing product that I think it's being valued as. But hell, I'm not going to short it. Like, especially in this environment, just like Amal said, if you have some type of advantage in this Corona-dominated environment, especially as gyms start to get rolled back again and economies start rolling back their stuff, gyms are definitely still at risk. I think that only increases the bull case in the short term for Peloton, and I think the valuation is, it could go up any which way, because I remember looking at this stock at $30 saying, wow, this is way too overvalued, and now it's at 60. So I don't really know what to think about that. But don't short it. I think that's the one thing I would take from it. Don't short it. I wouldn't buy it personally. But yeah, that's my 2 cents on it.
Yeah, fair point. Again, everyone, we're not here to provide financial advice. It's just, me and Faisal expressing our opinions. We're trying to do our best to give you guys our due diligence on how we see the market. If we really wanted to shill stocks, we'd tell you to freaking, buy Nikola or Penn or Hertz, some bankrupt companies. But we're not going to do that. We're going to be honest with you guys and let you know exactly how we value stocks, the trades that we're looking at on a day-to-day, week-to-week, or month-to-month basis. And as I stated earlier on in the video, this is pretty much the last point that I want to reiterate is I'm definitely a huge bull on gold. Okay, I really think I don't see gold under $1,900 by the end of this year. I'm still looking at the dollar to figure out what exactly it wants to do, because again, with all the printing that we've had due to the Fed and the stimulus created, the dollar is largely unmoved. Okay, and that's really surprising to me. So either the dollar is going to, be the final catalyst event that will be reshaped by what's happening, let's just say, in the equity markets and the bond markets, and maybe due to coronavirus, or the dollar is going to start breaking down, and possibly you might have some EM trades that you could potentially, short. If the dollar pushes up, you would effectively long the dollar against EM markets. One of my favorite trades that I do want to tell you guys about is the dollar krone. Okay, and I'm going to tell you guys a little bit of a background about Norway. Norway has a huge sovereign wealth fund. They have about $2.2 trillion, I think, in assets spread all across the world. The most amazing thing that Norway has done over the last 2 or 3 decades is that they have been super well prepared for a disaster, a collapse in global economies. They have been the most prepared, by far, better than any other country. And so they have all this money on hand. They have all these assets on hand all across the world. All right. So what they have effectively started to do is they have started to liquidate some of their positions, because they are also preparing for, the same coronavirus style environment, but they also realize, oh, wait a second. We have all these assets across the world. We see that the US dollar potentially, took off in March and potentially might take off again. Well, if the dollar is strong, that means they could just hold on to their assets, and they say, well, whenever the dollar gets stronger, our assets that we own are going to get stronger. And when they repatriate that money back into the krone, more often than not, they would offset, pretty much any movement of the dollar versus the krone. So the one big trade that I am looking forward to is if the dollar takes off against other emerging markets, let's just say the South African rand, the Indian rupee, Colombian peso, Mexican peso, I actually think that the best position to play in terms of the krone is you want to potentially either stay stable on the krone or short the dollar krone. Because I really don't think that people quite understand how strong Norway's pockets are compared to other economies in the world. So this would be a very anti-trend trade compared to dollar versus other emerging markets. Let me see here. I don't know if there's any other questions, but I do want to wrap up this analysis. So guys, again, if you did enjoy our analysis, make sure you hit the thumbs up for me and Faisal. We like doing these videos, every Sunday. We actually also do these videos Wednesdays and Fridays post market. So make sure y'all join, hit the subscribe button so you get a notification whenever we do go live. There's also a free Discord link below, so you can click it and join our free Discord group. On the free side, this is the analysis that you get. Some analysis from myself, some videos that I put up, some analysis that I put up. And then on the advantage side, all these locked channels that you see are all the channels that you would get if you were a paid member, right? FX trade setups, equities trade setups, what we're trading in crypto, how we're positioned in the markets, all kinds of fun stuff, right?
Yeah, I got a couple of things to say. I just want to close out just to give you all the stuff for the week. So for the S&P, the things that I'm watching, so I'm going into the week thinking that this is going to be a down week or a sideways week, and then we may inevitably go down or up, but I don't think it's going to be an up week like it was last week. So I think the S&P, if it starts to break above 3185, I think then I'm going to change my tone, and that's going to bring me to be a little bit more positive and not bring on a couple of shorts. But tomorrow, I think there's significant risk that the market could come down heavy tomorrow. So if it does, watch the level 3080 on the S&P as a very key short-term resistance or support level. If it breaks through that, then I think we're going to be in for a pretty ugly week. And then lastly, if we start to have a pullback, I think it could be a 7% aggregate pullback in the S&P. The level that I'm watching for it to base around would be 2910 to 2920. That represents a 7% pullback, 7 to 8% in the S&P. And then, so for the stocks of the week, if the market starts to show me some positive signs, I like Workday. It's a cloud analytics solution. They do a lot of not human resource, but employee data stuff, whether you check in or there's different types of employee analytics that the employer can get on their employees. Johnson & Johnson looks really good to me technically. That's a big pharma name. They actually have a multitude of products. They're just a healthcare giant. They're a pretty safe company in my opinion. And then Taiwan Semiconductor, TSM. Austin has talked about this a fair amount. This is one of his favorite semi stocks. And Friday, it just really made a nice gap up. There was no news on the stock, but it was up 3%, very nice volume. And I think it's going to continue to go up as semis, I think will be the best sector. Even if the market does pull back, I think they're going to do largely better in the second half of the year versus big tech and software. And then a short opportunity that I'm actually looking to get into, I kind of do my weekly scanner of what calls or puts are naturally good that don't have a lot of premium or whatever. And Oracle is one that if I do see weakness come Monday, I'm looking to get into some puts on Oracle that will probably expire within 2 to 3 weeks. So keep an eye out for that. For my Advantage members, I'll probably put it up early in the day or so that's when I'm looking to set up my short trade if the market does start to show me some weakness early on. So keep an eye out for those four.
Perfect. Yeah, so some of the positions that I'm in, I still have my Beyond Meat position. I think my average entry is actually like 142.3. So I'm going to pull that down just a little bit, right around there or so. So I'm slightly in the negative. I also have some Beyond Meat calls for 160. And then so I'm kind of in a different setup from Faisal in that I actually think that the SPY is possibly going to push up, but we'll have to see exactly how Monday shapes up to be. But I'm still thinking that the SPY is probably going to hit at least, let me see here. Let's pull up the SPX actually. I was looking at some exact numbers. So I'm thinking 3185 is definitely one area that I'm looking forward to. My SPY call is, I think, 317 for July. Let me pull that up real quick. So this is our community, guys, and this is where Faisal and I post our trades. Let me see here. So my SPY call I picked up on June 25th, and I think I I may have added to it, I think a day later. So when we were like down here on June 26th. So yeah, I mean, I'm up a good 100 points or so in uh, the SPX ticker. So I think my SPY call itself is appreciated too. My Beyond Meat call is down a little bit. I think last I checked on Friday, it was down -4.5%. So I'm bullish on both, and I do think that next week will probably be a positive week. But again, that depends on how Monday is going to shape up, because I do think that this is kind of an ugly candle that we printed on Friday, and given some of the leaders that Fassel was watching and seeing some of them break the microstructure of their supports was not the most positive thing. But it's a wait and see kind of thing for Monday. The other thing that I wanted to note is this kind of fractal, this W fractal that you typically see at the top of these uptrends, something that we've seen actually in, where was it? August 2019. Where's August? It was kind of something like this, right? So, just if you're a technicals trader and you like to look at fractals, you could kind of look at this kind of, W style movement and then pushing back up, even further, getting towards its previous high. So that would imply, this S&P 500 should get towards this key high, 3230, and possibly pull back down. And the other big gap that I'm looking for it to fill is way the heck up here around 3325. Again, this all depends how Monday and the rest of the week is going to shape up. But those are my thoughts and those are my positions. All right, guys. Well, I think that's pretty much it. We gave you guys a lot of actionable information to look forward to. I hope y'all enjoy this content. Again, we're on Facebook and Twitter. Just look up Alpha Trades. We're also on Discord if you want live chat from myself or Fassel, whether it's crypto, FX, and equities. All kinds of information we have in the Discord channel. So come join, and I'll catch up with y'all soon. Until then, we'll see you guys next Sunday.
Peace.